East Capital was founded by a group of individuals almost exactly 10 years ago in Stockholm. They at the time saw the potential for these very exciting markets at a time when these economies were transitioning from communist-style socialist economies to a market-style capitalist economies, which is a phenomenon which is really only a one-off. It's not a once in a lifetime, it is a one-off. So they saw this opportunity. In the meantime, we have accumulated $6.4 billion under management exclusively in the markets of Eastern Europe, which makes us the largest specialist in that sector. If you consider that, for instance, that the Russian market, our Russian fund has gone up 17 times in 9 years. And in fact, if you look back over the last 5 years, the Eastern European markets have outperformed any other emerging market type, whether it be China, Latin America or Asia. So we feel this is an opportune time to come to Asia and persuade investors in this region, which is the region in which wealth is being accumulated at a faster rate than anywhere else, to invest in a very exciting emerging market, namely the Eastern European region. There's very little leverage and there's no subprime lending at all in Eastern Europe. Of course, this phenomenon now has taken on a slightly global character. So we have seen some selling in the larger markets of Eastern Europe, namely Russia and Turkey. We think the selling is probably related to institutions that are forced to sell good investments, probably to cover losses or margin calls elsewhere. I think probably the two hurdles that one has to overcome is firstly the relatively unavailability of information. There's not much written about Eastern Europe, there's not much known about Eastern Europe in Asia as a whole. Secondly, East Capital is not a household name in the fund management industry. So the two hurdles that I have to overcome is the aspect of what is Eastern Europe and then who is East Capital. The differences possibly are the degree or the speed at which information is disseminated, and most striking for me is the fact that now email has almost totally supplanted the telephone as a means of communication. Many years ago, everybody talks on the phone. Nowadays, apart from trading desks at investment banks, it is very easy to get hold of people on the telephone. Yet it's quite difficult sometimes to get people to answer or look at emails. So that is what has changed. I think what you should do is to maintain a diversified portfolio, be long-term, and also to make sure that whatever you buy, you understand what you're buying.